Trust in mainstream financial institutions is in decline. And if you zero in on the root of the problem, it's the money itself. Meanwhile, we're seeing signs of a new type of financial infrastructure being built all around us, all centered around a new type of sound money. Today, I'm catching up with Zach Townsend, who is the CEO and co-founder of Meanwhile, which is the world's first Bitcoin-denominated life insurance company. This is a fascinating conversation. And if you want to get a hint as to what the future world looks like when it comes to all financial products that you consume, this is the episode for you. Hope you enjoy it. Let's get started. They would kind of be forced into probably a high allocation to bonds. And if we think about where we're at in the world right now, where we might be, who knows, witnessing the end of a 40 to 50 year trend of declining interest rates, well, what is that going to do to the value of bonds? So they're moving further and further out the risk spectrum. And that's happening at the same time. So that's almost like justification to be somewhat concerned the more you understand of the mechanics. But correct me if I'm wrong, like you're obviously the expert in this space. Am I right in assuming that traditional life insurance companies would be pretty heavily allocated towards bonds?
Yes. A lot of insurance regulation is exactly to this question of how much risk can you take on as an institution? And that's for a good reason, right? Like in some ways, these can feel a lot like banks, except they don't have deposits, they have insurance policies, right? So there's not really run risk. But fundamentally, there is a somewhat of a principal agent problem or a moral hazard problem that people are trusting you with billions or trillions of dollars, and you don't want the insurance company to go like, all put it on black, in a roulette game, right? So there are a lot of rules, but I think you are getting to a deeper truth, which is that these institutions have been run a specific way for a very, very long time. There have been some innovations over the last 30 or 40 years, but yes, the regulators push you to have conservative asset allocation, or they push you to have products that really have that risk be borne by the policyholder or the user directly.
It feels like in this market here, where term life rather than whole of life cover is offered for life insurance, the primary avenue of pressure relief in order to balance the books from an insurance company's perspective is actually premium inflation. And over the last 3 to 4 years, especially, we've seen a significant rise in premium inflation, well beyond that, the normal CPI rate of inflation. And so I suspect it really does matter what happens behind these closed doors. And I think that, or I worry that as time goes on and the awareness that a very small group of people have around how the financial system works, including banks, insurance companies, and regulators, as that disseminates, as it will over time, will there be a crisis point in the future? I know I'm talking in the future here, but would there be a situation in the future where there was a mass exodus of every single healthy person that could leave from traditional life insurance companies to more innovative life insurance companies who had a bit more of a clever base of capital that they were growing behind the scenes? Do you kind of see a bit of a crisis point happening in the future?
The crisis of trust is quite serious, and like there's just skepticism about financial institutions in general, financial institutions like having your interests at heart. And I think that as generations that like millennials and Gen Z folks like grow up, as they are the primary location of wealth in our society, that their lack of trust in these institutions, which is correct and deserved, is going to create crises. Because the truth about most life insurance companies is that they have to keep selling every year for it to all like work out. So as you point out, that as you have declines in the number of people who are buying, then every individual like has to potentially pay more, and you have more adverse selection, and thus you have like more risk, and it's more expensive. So you're in this potentially this death spiral. In most jurisdictions in the world that have taxes, there tends to be some tax privileges for life insurance. And that makes good sense, right? Like society doesn't want there to be starving orphans and widows. So the idea of incentivizing the purchase of life insurance sort of makes good sense. So there's not the same incentives to go toward permanent life or whole of life coverage, and you end up in term. And term isn't like necessarily a bad product, but it is a like pretty bad product for the insurance company. So it's sort of hard, or you just end up in the death spiral I was talking about if fewer and fewer people are buying.
Yeah. Well, it kind of feels like you're renting insurance rather than owning it. And it also feels like, from an
Mm.
insurer's perspective, it's kind of like a Ponzi scheme, let's be honest, right? Like if your primary revenue model or your primary business model is to fund claims with inbound flows of money, then as soon as those inbound flows of money dry up, then yeah, you're kind of in trouble. And especially as we move to a world where going further out the risk curve means you're accepting more volatility. We have less stability, and then therefore I keep on coming back to this fact that it feels like there's less trust that is warranted as well. So
I
yeah.
think that's right. I guess the avenue of trust that I worry a little bit more about, which like does somewhat lead us to Bitcoin, isn't just a lack of trust in institutions, but that lack of trust appropriately extending to the institutions at the center of our society and the money that we have. So one of the reasons that we ended up doing this crazy thing, which is like we'll talk about building a life insurance company in Bitcoin, actually comes from my co-founder and I, like so many people, like we graduated college into the great financial crisis. So there was a very natural skepticism and concern about the trustworthiness of incumbent financial institutions. And like so many folks, we are led to this idea that like, okay, well, maybe a global decentralized store of value outside the control of any government and central bank can be attractive. Now, I sort of draw a line that I don't think you should like run an insurance company on what I think are actual frauds and Ponzi schemes, like a lot of like things in crypto. But these things are all like connected. Skepticism of insurance companies, of banks, of central banks, of local currencies, and that skepticism doesn't come from nowhere. It comes from like the hard experience of the last 20 years.
Hmm. And I think it's fascinating at the moment to see a government in power in the US that seems to understand the solution to a lot of the financial problems is to actually fix the money at the very core of it all. And with the US administration's move towards potentially setting up a Bitcoin strategic reserve, surely this acts as a bit of a model. And maybe here is where I could get you just to cover off what you've done with Meanwhile, a truly Bitcoin native life insurance company. Why don't you just tell us a little bit about that?
Yeah, well, like I sort of alluded to, like we believe that Bitcoin is going to be at the center of a new global economic system that's decentralized, outside the control of other governments, and we believe just like any other economy, it's going to have these critical financial services, and life insurance is one of them. So we have built a regulated and licensed, full stack life insurer, and we have all the like normal boring obligations of a life insurance company, like a chief risk officer and a governance risk and compliance framework, and like an audit, and these things that on some level are just normal for insurance companies. And then what's unique about our insurance company is that it's entirely in Bitcoin. So you pay premiums in Bitcoin, we pay out all claims in Bitcoin, and then we do everything in between. The actuarial calculations, the surrender values, the death benefits, the audited financials are all entirely denominated in Bitcoin. And in that way, our institution is insulated from the price movements of Bitcoin, which can sometimes be quite severe. But we more critically are able to provide folks these long-term promises, these long-term guarantees in what we believe will be a durable inflation-resistant store of value.
Tell me a little bit about the a bit more about the inner mechanics, because I'm just thinking if it was any insurance company operating in a different jurisdiction where there was a different currency, then it doesn't really matter that it's the Swiss franc or it's the Australian dollar or the US dollar, right?
Correct.
Because it's the whole thing. And that's what's happening here, but it's in the digital ecosystem with Bitcoin as the unit of account and the medium of
Yeah.
exchange within the system. So, uh, in terms of the market that you serve currently, I'm guessing it's a lot of Bitcoiners who understand where the future is going, and that's why they want everything to be in this Bitcoin standard, and that makes total sense. But in terms of a revenue model, traditionally we think the exchange rate between that and fiat currency, that's where the gain comes from. But my guess
Mhm.
is that because you're completely Bitcoin native, I don't think that's going on behind the scenes. So where does the actual revenue model come from to actually make this work?
Yes, we are just entirely in Bitcoin, and you said it better than, or just as I usually say it. Like we could be running the business in Swiss francs or euros or yen or whatever, and we're running it in Bitcoin. Yeah, the core product we have right now is a whole of life product, and that means it lasts the whole of your life. And it's very straightforward. We have two versions of the product. One for Americans, because there's a bunch of tax rules in the U.S. about various things, and so in the U.S. it's a 10 pay, so you might pay like 1 Bitcoin a year for 10 years, and then we promise you whenever you die we'll pay you 15 Bitcoin. And then for international customers, I guess it depends on the jurisdiction, but we tend to have a single premium policy. So in my example, you might put in 10 Bitcoin and then you'll get 16 or 17, right? Because you're front loading it, you get a little more. So yes, the core belief of our customers is that 15 or 16 Bitcoin will be worth significantly more in the future in purchasing power terms than it is worth today. So we sort of ask a very simple question: Would you rather your kids got 10 Bitcoin or $1 million US? I don't know the exchange rate with the New Zealand dollar.
Yeah.
And for our users, the answer yes is typically that 10 Bitcoin. As for who the customers are, we have two pretty distinct like customer bases and personas. One is exactly what you talked about, which is like Bitcoin native people, folks who are wealthy because of Bitcoin. They truly believe in Bitcoin like through and through. What's nice about those people is they tend to be growing up. They tend to have bought a lot of Bitcoin in 2013, 14, 15. In their 20s, they're now in their 30s or their 40s. They're getting married. They're having kids. The idea of life insurance is resonating with them. So that is one persona. The other persona we have might be much closer to the listeners of this podcast. You're thinking about investments. You've made a decision already to buy some Bitcoin, but it's not the bulk of your net worth. Maybe it's 5 Bitcoin or 10 Bitcoin or even 1 Bitcoin. But you have a small business or you're running a family office or whatever. You're an entrepreneur. This user more buys it because they plan to hold it for a long time, but they don't like have an otherwise productive thing to do with it. They are really thinking of it in terms of an asset they're going to pass on to their children. And we allow sort of normal whole of life mechanics where you can take a policy loan against the policy. So there are like ways to get intermediate liquidity. Intermediate or ongoing taxation of Bitcoin holdings can be onerous. So perhaps putting that into a single premium whole of life policy that you could borrow against in the future
Yeah.
makes a lot of sense.
Yeah.
So it's a product like I joke from like the 1830s. It's just that instead of being in dollars, it's
In
or
Bitcoin.
euros or yen or whatever, it's in
Right.
Bitcoin.
So part of the revenue model presumably comes from,
Oh, this is your
well,
other. I'm sorry. This is your core question. We make money just like a normal whole of life book at an insurance company,
right.
which is we implicitly have guarantees, returns in the policy, right? So you've given us 10, we're promising you 15, right? So there's some probability distribution of when you're going to die, and you can like do all that math, and it comes out to saying we're offering you about 2% yields in Bitcoin terms. We then run a very conservative, never had a credit loss investment book in Bitcoin. So that's like critical to understand. The assets in our balance sheet aren't Bitcoin. Bitcoin's the currency of our balance sheet. The
Right.
assets in our balance sheet are things like prime loans and collateral loans and term loans and things like that. We fundamentally are in the business of trading duration, which is what we have. That is, we hold our assets for an incredibly long time. So we are able to offer duration to counterparties who want to borrow Bitcoin. And then what we get in return for that duration is significant credit protection. So we're negotiating 100-page master lending agreements, covenants, seniority, collateral. So almost all of our loans are in the bucket of collateral loans in insurance speak. So they are collateralized or over collateralized. So we really try to avoid credit risk. But to get to your question of how we make money, we earn 3% yields, we promise 2% yields, and that 1% spread is our
Sure.
investment income.
Go
Well,
ahead.
and I should say, so you had a fellow on your podcast recently, Peter Dunworth, who's doing these Bitcoin for Bitcoin loans. We're a counterparty on some of those loans, right? Because we have a pile of Bitcoin. We're interested in lending it to others. Those loans tend to be fully and over collateralized without any credit risk. So that's sort of our bread and butter, right?
Got it. Nice. Well, that's a great way to tie a bow on that one. Now I can understand that a little bit more holistically as well. That's cool. So I guess some people might be thinking just generally that Bitcoin is their schmuck insurance, to quote something
Correct.
from Chamath Palihapitiya. I love saying that name. And he, so that whole idea, like just own a little bit, don't be the schmuck who missed out. That's kind of like insuring your traditional asset
Yes.
portfolio, right? So are you
I should
members?
say that's the second persona, right? So the first persona of people, like, they might all be in all Bitcoin and they don't even think in dollars, right?
Yeah.
But this other persona that, like, you've bought it for schmuck insurance, you don't want to be the guy who didn't have it. Well, then maybe you want it to be in a life insurance policy that has some yield, in many jurisdictions has tax advantages. We're in Bermuda, so there's privacy and asset protection. So it tends to be like this whole package that gets people excited,
Yeah.
as this is the right thing to do with their Bitcoin. But
Mm.
we in general don't see it as our mission to convince people to buy Bitcoin. We see it as our mission to sort of interact with folks who've already decided to have Bitcoin and then say, like, this is the right structure for you.
And the other thing that I've been thinking about a lot, probably like I've come to completion around thinking of this recently, but I've been thinking a lot just around the personal risks around self-custodying Bitcoin. And we recently made some decisions around not self-custodying just because I talk about it openly and I don't want to be that guy, right? And I'm considering this product now is maybe this is another way to kind of, in a way, time lock Bitcoin for my estate in the future, because
100%.
one day I will die. I can promise you
We have
that. You know?
we have a ton of people who, again, in some jurisdictions, it's nice because it goes to your kids' income tax or completely tax free. But also, we have a ton of users who are just concerned about the mechanics. Like, we are under a legal obligation to try to figure out who your beneficiaries are, whether you name them or not, and to get them your Bitcoin, right? And if that means helping them set up a wallet, if that means, translating into dollars and sending it to, like, we'll do what it takes. Like, that's our job, right? Is getting your beneficiaries their Bitcoin. So we have a ton of folks who send us, buy a policy with all their Bitcoin and sort of have us, as you say, be their time lock estate planning service. But we have a whole other set of users. One, we have policy limits. Like, we won't take more Bitcoin from an individual user than usually about 30, because if that person dies, then we have concentration risk challenges.
Totally.
But that also often comforts people, right? Like, you might have decided to have some multi-sig solution, or you might decide to bury some in a hardware wallet in your backyard, and then you might decide to have some with Meanwhile as a way to manage your estate planning.
I think this is interesting. And it's so interesting that I suspect most people will miss it. Do you feel like we're going to start to see a wave, like I do, of new Bitcoin only businesses coming onto the scene, building the building blocks of this new financial system?
Yes, I do. Yeah, I mean, like fundamentally, to go to the core of why we started this business, we think that the Bitcoin economy is going to grow, and it's going to be a big part of the global economy. And I'm not a maxi in the sense that I think there like won't be U.S. dollars or there won't be, RMB or whatever you might believe. I just think that a sizable part of the global economy is going to be denominated in Bitcoin, and I think it goes right back to the conversation we were having. Right, if you live in Argentina, you do not buy long-term insurance. You do not save because you are going to live longer than the Argentinian peso. Like I have my son, my oldest, was born in 2018. If I bought $1 million US of life insurance coverage in 2018, I have seen the purchasing power of that policy go down 20%. So I think when you think about durable global store of value, then you are going to begin thinking about Bitcoin. And then, yes, I think there are going to be banks in Bitcoin. There are going to be payments companies. There's going to be asset managers. There's going to be financial advisors. And yes, there's going to be insurance companies, and in our case, a life insurance company. And that's a thing that we have believed since we founded this company in January 2022. And yeah, we get a lot of credit, I think, from the community, from we have built the thing we said we are going to build, and also we built that through cycle, right? So there's been FTX, there was BlockFi, there was Celsius, there was Voyager, there were all these like frauds in crypto, and we just kept trucking along because we believe in Bitcoin. We believe that Bitcoin is a store of value, and we believe that these types of regulated, licensed, audited financial institutions are what are going to own that space in the long term.
Right. Nice. You mentioned based out of Bermuda. You're operational in the US and some other countries already. Just tell me a little bit about what your plans are for expansion and where you currently operate.
We operate in Bermuda, and then people from different places can buy life insurance from us in Bermuda. Very important distinction.
Okay.
We prioritize countries based on the number of people who have signed up on our website. And then it's really just like KYC, AML, and underwriting infrastructure. In addition to international expansion, is we're launching more institutional products. There are things like guaranteed investment contracts and GICs, and those are really like certificates of deposit, but with an insurance company. So insofar as people have Bitcoin, they might want to get yield on, and you trust us to get that yield, then that's a product. And then we have a pretty robust pipeline around doing reinsurance, which is to help existing carriers who are really struggling with trust and differentiation to bring to market Bitcoin products. And we're working with a bunch of carriers on that, where we are the balance sheet and sort of designing the products, but they're ultimately the ones who are working in the country they live in to bring those products to market.
Yeah, that's awesome. And so, in terms of distribution, do you imagine, like you already touched on the fact that you might serve as some sort of anchor or support structure for traditional mainstream insurance companies wanting to make a gradual pivot, perhaps, who knows? But what about distribution in terms of there's a lot of obviously insurance agents and advisors around the world. Do you imagine that traditional insurance advisors may start to recommend Meanwhile or a Bitcoin only life insurance policy to their clients?
That is happening.
Okay.
Different countries have different products have different commission structures. I think, as I said, we tend to have a very, on some level, straightforward, simple to understand product. So I think to some agents, it can feel like our commission structure is not as robust as some of the other products they might sell. But that's exactly because I think we've designed it in our minds to be good for the users. But yeah, we're starting to work with third party distribution, and that's insurance agents, wealth advisors, private bankers. Again, I think there's so many people in the world for trust reasons who have decided that Bitcoin is the right part or is a part of their portfolio, and that we're the right solution for holding that Bitcoin
Sure.
for the long term or time locked or however you want to think about it.
Yeah. Yeah, and I think like certainly with the clients that I'm speaking to increasingly who do fully understand Bitcoin, it really is about how can we slowly start replacing some of our traditional finance products with Bitcoin native products, whether it's a lending product for their home or like an insurance product now or payments. I can kind of see this is going to happen little bit by little bit slowly, and it'll just meanwhile when no one's thinking about it, it'll happen, right? So that's pretty
Yeah.
cool. Pretty cool. So if people want to kind of go on a bit of a wait list, what would they do? Like, do they just go to the Meanwhile website, say, "Hey, I'm interested. If you ever launch in my jurisdiction," is that kind of what they do?
Correct.
Yeah.
So if you go to meanwhile.bm and you click, I think it's get started, there's like 10 or 12 questions that really kick you off, and then you're sort of added to our wait list. I'm glad you made the Meanwhile joke. That we love the name. Some people don't like get it, but the idea is that like you live your life, and meanwhile, like we're there protecting you. We think it's just
That's
like
good.
an amazing brand for a
That's good.
financial services company.
That's better than what I would have chosen. Yeah, it's good.
But again, it's meanwhile.bm.
Awesome. Well, thank you very much again for your time.
Thank you.
Hopefully we'll catch up with you again soon.
Perfect.
All right. Take care.
Cheers.